reserve and be geared for the movement upwards whenever opportunity comes. Uh, no doubt there is going to be a pressure on banking sector in terms of NPAs, in terms of EMIs, in terms of loans and so on and so forth. But with appropriate support, these
Yeah.
banks can see a great business going forward. So it's time to start accumulating in banking sector. But please remember, you have to be gravitating towards bigger names, quality names, better names, as there will be a flight towards safety and flight towards quality among the depositors after the current experience.
Yeah, I take your point that in all cases the big will benefit. But I mean, I think the unnecessary rumor mongering and judging a bank by the share price needs to stop. There is too much of financial instability being created simply because of share prices. They are not connected, and I think unnecessary WhatsApp forwards also on this just needs to stop. I think I would give the Reserve Bank full marks for maintaining financial stability. Not one single rupee has been lost by any commercial bank depositor. So this unwarranted WhatsApp forwards and rumor mongering should kindly stop. We need some stability. Well, a little bit is returning definitely to the Sensex and the Nifty at this point in time, 0.5% higher, but there is still red on the screen. The number of declining stocks are still more than the number of advancing stocks, with the mid caps showing a little bit of pressure. That would genuinely happen. But Nilesh, you think the price damage is adequate? I think you don't see it. I think what 7511 was the low we reached yesterday. Do you think that's it? You would guess?
Nail at that. I mean, it's very difficult to figure out where the bottom is. If I draw back on my own experience in 2008, when market corrected from 21,000 to 15,000, we thought that this correction was good enough. At 12,000, we became super convinced that this is the bottom. At 10,000, we were more convinced that this is the bottom. And 8,000 also, we were convinced that this is the bottom. I still remember a function in Trident rooftop, Nariman Point, where 4 or 5 of us were present. And we said that this is a big correction in the market, great opportunity to buy. And when the function was over, all of us were in one corner standing alone, and not even a soul came to us. It's very difficult to figure out where the bottom of the market is. We only knew at 15,000 was a good time to buy, at 12,000 it was a better time to buy, at 8,000 it was the best time to buy.
Yeah. I take your point. There's no point trying to bottom fish, but it does look like the prices are reflecting the kind of March damage we are going to see on output because of the lockdown, and what we will see perhaps in April. Thank you very much, Nilesh Shah, for joining us. We need calming voices, and we will seek the benefit of your advice again and again. Okay, original equipment makers, that is OEMs, have shut down production because of the COVID-19. We read out that long list of people who have already, made their announcements to the exchange. But now to understand the impact on those who have financed vehicle makers, vehicle financiers, we are now going to speak with Ramesh Iyer, the Vice Chairman and Managing Director at M&M Financial. Good morning, Ramesh. Thank you very much for joining us. We are speaking at a difficult time for the country in terms of social health itself. But what is your sense? Do you think since vehicle financiers will be in a bit of a problem, what is the extent of the problem? Are you already seeing EMIs not being paid?
So clearly, right from beginning of March, once this started and there was a lot of discussion around, we did see people wanting to hold back even if they had the money, because there is an uncertainty about what is tomorrow. So people had started becoming cautious. But even more important, the overall activity started to reduce, and therefore people's earnings starts to reduce. But I think these are times where, instead of really worrying about what really is going to happen to the growth and things like that, these are times we are really looking at, how do we help out the consumers? Fortunate, it's still not as impactful in the rural market, possibly as we see in urban. It's good that it's still not traveled that distance. But clearly, my guess is 3 to 6 months, time is gone. People will have to figure out after things get normal, they'll come back. They will have to start re-looking at, what else to do, how else to do. So I think the real impact will be known not now when we assess. I think we will really know 3 months down the line, how many of them want to do what they were doing, how many of them want to do something else, and how deep is the impact going forward.
Okay, so the next 3 to 6 months is a write-off for sure. Mr. Iyer, good morning. I was so happy to hear that instead of focusing on growth, of course that's important, you're also looking at now how to make life easier for customers, for daily wage earners who are perhaps, your clients. I want to understand from you, what are the steps that M&M Finance is taking in order to do that? Are you looking at easier loan facilities, easier financing schemes, etc.? I mean, what have you planned?
So, of course, anything that we announce today is not going to be put to immediate action because nobody is really meeting each other and things like that. And as you know, rural is still continuing to be a little more physical model. But clearly our thought process is, take the consumer input, and if he thinks that he needs 30, 60, 90-day moratorium, I think these are a time where we will have to partner them. And I'm simply looking at it as follows. If you look at any time in the past, and if we had a poor monsoon, and if the crop had failed or whatever, the consumers do tell you this season I can't pay, and the season would mean 3 to 4 months. So we are willing to very surely look at it that way to say if the consumers need additional time, I think that's what we want to give them surely. We do not want to penalize them with maybe a penal interest for non-payment and all that. We will identify at least consumers who have been so far very regularly paying. They need to be completely supported. We do not want that credit history get spoiled because of this difficult time, because people may not even remember 2 years down the line if somebody comes out to borrow, and if their credit history was to show a default, we don't want people to think that they were defaulters of the past. So very clearly we will want to give them time. We may not want to charge them penal interest. And more importantly, if consumers do need some kind of a temporary short-term loan after things get to some normalcy, we are very willing to look at what could be that short-term small-ticket loans to the existing consumers whom we may want to support, and partner them to come out of this situation as things start to improve.
Right. Mr. Iyer, good morning, Prashant here. You began the conversation by saying that, well, at least 3-6 months is gone. After that, we'll have to figure out what they want to do, whether they want to continue to do what they were doing earlier or something new. I'm assuming you're referring to a lot of the borrowers, your borrowers, right?
That's right.
Yes. Could you just tell us, in your assessment, what percentage of your borrowers' book will fall in that category, which essentially will have to decide fundamentally if they want to, if they can continue with what they were doing earlier, or they'll have to look for alternate sources of livelihood.
It's not that, it's not that we already know what category would be that. But you look at, they are all people who are using vehicles to earn their daily. They're using their tractors for their daily living. Right now, if the whole process is going to get delayed, I think most of them will start looking at what else can I do so that I also de-risk myself to get some parallel additional income, right? Sorry. I think that's something that they will for surely look at, because, you don't earn today, but your things have to continue.
Yes.
So therefore, the financiers may support, may give them some interest waiver, may give them some temporary loan, but eventually they will have to find a good livelihood which will help them to continue what they were doing. So if you take transport operators, right? Supposing the economic development takes more than 6 months, 8 months, whatever it takes, until the whole production starts, goods starts to move, and contracting segment starts to happen again, etc. I think, it's a long period of 6 months. If they are not going to be doing anything or not much, then they will all have to start looking at what else can be done to kind of keep the whole thing going. And therefore, I personally think new earning models possibly may emerge in rural market. Will you see more people setting up small shops? Will you see more people willing to move away from where they are and go to another location where there could be a possibility of some earnings? So honestly, if you ask me to list out 10 things, do we know? I don't think we know. Do we know which customers will look at it that way? Possibly not. But surely one thing we know, a situation like this is going to push everybody to rethink. I mean, you look at us itself. We will also deeply rethink as to what fundamentals of the model could undergo change after this, right? Yeah. And therefore, we will all have to figure out what that new life after all this is. So I'm just kind of saying that it's all about being very vigilant and being very partnership approach, being very cooperative with each other, because many models will emerge out of partnership rather than individually trying to do it.
No, very well put, Mr. Iyer. Just one point. You yourself at your end will provide some forbearance to your borrowers? I mean, I think you outlined that earlier. Yeah.
See, as an association, and since I chair the FIDC, which is our federation, we have represented to RBI to say that consumers are already asking us for moratorium, and we would request that that moratorium be provided. And we have also said that these are times where maybe the NPA norms itself will have to be rewritten to say it's not 90-day delinquent, but 180-day kind of a delinquent. And it is more to protect the good customers who've been paying so far, and if they're not going to pay next 3 months, we don't want them to be recognized as an NPA. So whether or not, how the discussion goes, and I'm sure the regulator will look at it very, very favorably. But even before that, we do definitely want to, what do we do? I mean, you call up a customer, that's all you can do today. Even if he has the money, he's not going to travel the distance to pay you. We are not going to be going there to collect. So I think whether we want or we don't want, it becomes a part of the system that until things normalize, people will not be able to discharge their liability even if they had the money.
Yeah, that's a fair point. Ramesh, two very quick and last questions. One, you must have a rural portfolio which is actually healthy because we've had a good harvest and we've had fairly decent food prices as well. So how would you demarcate your slightly troubled portfolio? And secondly, what is the one ask from RBI? One or two for that matter.
So as I said, one ask from RBI, we have very clearly said,
repayment.
The moratorium to be given to consumer and not classify them as a rescheduled contract, and therefore reset the NPA norms during this period. And we are not asking honestly anything more than that at this stage. And I'm assuming that once that kind of a moratorium is made available to the end consumer, the banks will look at giving similar moratorium to the NBFCs. Right? I mean, not everyone will have a very strong parentage backing and things like that, who depend actually on recovery from consumers to discharge liability. And if that consumers are going to be given a moratorium, the cash flows of NBFCs will also undergo that pressure. So therefore, there has to be a back-to-back moratorium also from the banking system to NBFC is something that we are trying to kind of ask for. As far as good versus not so good portfolio, it was all healthy till February as we saw recoveries were improving. We were very hopeful that the NPAs would look much, much better. And through the year, we saw that happen as well. So, if I kind of look at it at this stage, and I've been saying this for long, it's not by portfolio, but it's by geography that we really demark a good or not so good portfolio. And we did see that West was improving, MP was doing good, Rajasthan, Gujarat was doing good. South was beginning to happen. So overall, we were seeing improvement. But as I speak today, I would think that everything would look kind of similar or stand still.
So when you say similar or standstill, I mean, for many quarters now, you've been holding on to double-digit growth. Even in the quarter gone by, it was a 15% loan growth that you saw. Is it a given now that the entire industry, including yourself, would move to single-digit loan growth for the end of the fiscal? Or do you think even that would be a tall ask given the challenges that we're looking at?
So, two things happened, right? At the beginning of this quarter itself, the volume started to shrink because everybody was preparing for BS6. And therefore, the inventory levels started to come down and OEMs were not billing adequate and enough. So clearly what was happening was people were getting ready for BS6. So that volume shrinkage had begun to happen. And to top it all of this that has happened, even the little possible sales that were likely to happen have also come to an end. January, February was average. March has been absolutely no number kind of a month. So I would think that it would be maybe a low-digit, single-digit growth book, or for some, it may not even be that.
Okay. Yep, I agree with you. Actually, now it will be more stability, and even a contraction of book is perfectly okay. In times of slowdown, you should not be lending. There won't be any people asking for that matter. So, growth perhaps is not the word that we should be even using. Thank you very much, Mr. Iyer, for joining us with your thoughts. Well, the markets have once again shown a tendency to sell at the highs. Anuj?
Yes, Lata, indeed. The bank nifty is the problem. Financials. ICICI Bank is down 4% once again. And you know what? ICICI Bank has this month fallen about 42%. So it's halved from its highs. And that is the problem. Even the stronger stocks where, you started to see selling now. SBI has more than halved. So financials, ex of financials, the market is doing rather well. Reliance is doing well. Nifty is still comfortably in the green, 0.75%, but it says that the weight of financials is just a bit too much on the market right now, and that's not letting the market really, participate in this global run.
Yep, I take your point. Actually, you just have to discount the pain of the slowdown. The fact that for a month there won't be business, which will mean people will not have cash to pay salaries. So all that will compound. I think the markets will soon realize that a package will come and that these things will be eased out. Let's remember, we are not the country which is most affected by the coronavirus. Look at the number of patients and casualties in other countries. We must be conscious of the fact that life is not coming to an end. Probably continents like the subcontinent of India and the continent of Africa is actually reporting less. And even if you're going to speak about perhaps not enough people tested, I think disease is something which is very, palpable. You can see it. You can see that there is no around you people sneezing or showing up signs of an epidemic. So I think we should not behave as if all hell is breaking loose. Things will just take their time to discount the lockdown and the slowdown, and will come back to normal.
Absolutely. Lada, actually, right, if, as you say, the package will come, if that part is taken care of, right, just some numbers. China announced a lockdown, full lockdown, when the number of cases were about 600.
Yep.
Contrast that to Italy. Italy announced a lockdown when the number of cases were around 9,000. And look at the situation we are in. We've announced a lockdown when we are around 500,
Absolutely.
550. So, the point that you were making, I think absolutely agree with that if you tackle the health issue, which is the underlying problem, and that is taken care of, but at the same time, we will need support. People will need support. Businesses will need support. And if that comes, right, I think it's going to be tough, but you can
I'm absolutely sure that all these three areas will be tackled. That health issue is being tackled by the Prime Minister in that 8 p.m. speech yesterday. And we will get a package for the financial sector so that it doesn't get locked down. You will get a package for the real economy, and you will get a package for the informal sector. So, we shouldn't be acting nervy or panicky. We'll take a break on that note, and thereafter we're going to chat with another person who knows a thing or two about manufacturing and about consumption. T.T. Jagannathan, Chairman, TTK Prestige, joins us.